Noting P/E ratios go down in bad times and up in good times, large and mid-cap stocks are actually around 4 times overpriced. Small caps decoupled from the rest of the market since around 2012, making them now 8 times overpriced. This is something that does not get talked about by the stock pumping propagandists. I appear to stand alone in making this important point. We are not in any way at all in some average year to then compare today's P values with the historical average, which is around 13 and not 15 as others like to say, being there have been the one-time event of the middle class piling into the stock market, beginning in the 1990s, and of the Federal Reserve focusing on trying to manipulate up the stock market. I strongly suspect the United States Treasury Department was behind this corruption in their role of the plunge protection team, constantly making an overpriced market even more overpriced. I even wrote the United States Treasury Department suggesting they have in place a metric such as no manipulating up of the stock market until it is 25% undervalued, not as they do with impunity, such as when the market is 3 times overpriced, just in seeing a little drop, then step in and pump it up to even higher than the recent highs. This abuse of the people's money to keep coddling the wealthy needs to stop. I alone cannot make it happen. If you care for this country and for your own well-being and that of generations after you, you would help out in this regard. With a real GDP growth rate negative for the past 20 years per generally accepted accounting principles, using a non-contrived monetary inflation rate, the population inflation rate, and accounting for deficit spending, we should now be comparing P values of today to the lows, which generally are around a P of 6. From this one can infer that large and mid caps are about 4 times overpriced, and with the Russell 2000 at around a P of 100, small caps are on average about 8 times overpriced. Realizing there is much speculation in going long with small caps, thereby making for a larger average P than for non-small caps. The P ratio stated for the Russell 2000 on many sites purposely exclude the massive number of corporations with negative and zero earnings. In not playing with the data, the P ratio is around 100. About a third of corporations in the Russell 2000 have 0 to negative earnings and are customarily omitted to provide a fake P ratio of around 20. This evidently helps to fuel the extreme overvaluation of small caps. Contrary to the handful of YouTube submitters speaking on the financial markets who push out 1 or 2 videos per day rehashing what is easily publicly available, I continue providing a fresh perspective, cutting through the lies, and without getting paid, I work for the people in hammering away at the Federal Reserve like no one else. The SEC, both former President Obama and the current fraud-in-chief, Trump, many in Congress, the United States Treasury Department, the United States Justice Department, and more in trying to end the corruption I see in the financial markets. I tried to put a stop to the omission of corporations in the Russell 2000, which gives a fake low P value. At least I tried on numerous attempts. That's more than could be said about those who are making their 5 to 10 grand per month simply pumping out YouTube videos. So who is worthy of greater compensation? With an overpriced stock market, manipulated up or not, it widens the wealth divide, hurting the middle class and especially diligent investors on the correct side of fair value. With the Federal Reserve's highly egregious, unlawful upward manipulation of the stock market, the wealth divide is now at record levels, along with homelessness. Expect the actual economy to worsen as there is planned more regressive policies, including lowering the interest rate by the Federal Reserve. United States is in a masked economic depression, worse than the lesser depression of the 1930s on many accounts. Food stamps hide the problem. Look at the massive number of adult children having to live with their parents. The homeless camps everywhere. And besides food stamps hiding the problem in supplanting soup kitchens. Soup kitchens still exist along with free food pantries and are swamped, being the actual economy is far more worse than the complicit media which is aligned with Wall Street and government wants you to know. And look further at the extremely low interest rates hurting savers and including many tens of millions of elderly. Getting back on small cap stocks. Yellen made an announcement back in 2014 stating small cap stocks were expensive. When someone of her level comes out and says something like this, you know it's much worse than what is mentioned. My formal complaint to the SEC about this matter on March 5, 2018, edited. Small caps still freaking so overpriced. I demonstrate the mid-caps and large caps are about 4x overpriced using the reasoning I put forth in the 2012 article, 2 times overpriced stock market. As you know, the Federal Reserve's unlawful upward manipulation has cost some people lots of money, I being perhaps the biggest victim of their anti-stimulus. Piecing these sites providing full information in garnishing a fair value for the stock market along with my newest site, Small Cap Stocks Wildly Overpriced, you should recognize something foul is going on, and I believe the impact of the misleading pricing quotes not per share price but in the P-value for the Russell 2000 must be playing a role to make small caps decoupled from the rest of the market for no fundamental reason. As I mentioned and have known for quite some time, and is not just highly annoying but an outright egregious lie, even if the footnote is provided, is that the investing community is misled into thinking the Russell 2000 is not so overpriced relative to the rest of the market. When 1/3 of the corporations in the Russell 2000 have 0 to negative earnings. Properly accounting for this, just like our government not calculating the real GDP growth correctly in using a contrived inflation rate and wholly dismissing deficit spending, otherwise it would be seen it has been deeply negative 10 years running and currently at -7%. See my 2012 article. Negative 10% real GDP growth unmasked, and this in addition to so many things is unjustly forcing rightful short sellers to lose big. The highly fraudulent scheme of the numerous financial networks all stating a false P/E ratio in purposely excluding the many 0 to negative earnings corporations of the Russell 2000, misleading investors into thinking they are value buying when in fact they are buying into a much higher P/E ratio. Idiot than disclosed. Even if such egregious activities are permitted, these massaged figures should be placed as footnotes and in the regular area, the true P/E should be posted. I contend there shouldn't even be a massaged figure presented, as people investing in the Russell 2000 are not buying into only those corporations having positive earnings, they have to buy into the congregate of 2000 corporations. The United States Treasury Department along with the Federal Reserve may be playing a huge role in pumping up the small caps disproportionately to the rest of the market. It appears small cap stocks are first pumped up using the Russell 2000 to juice up the rest of the stock market, as it would take less money to accomplish this, especially in the futures market, and then once getting traction, additional money is poured into both the Nasdaq and Dow. I've seen the disparate market movements in the futures market and regular trading sessions to arrive at this conclusion. There should be governmental oversight preventing this additional manipulation beyond the unlawful upward manipulation pushing up the stock market in general. Many diligent investors are unduly getting affected. End of SEC complaint ****. At least some sources show a non-massaged number for the P/E ratio of the Russell 2000. The Wall Street Journal site provides a truthful P/E ratio. However, look just about anywhere and you'll see reflective, a P/E ratio that is misleading, one that is in the 20s. Note: This is not like a few corporations in Nasdaq having a P/E ratio around 100. This is an entire index of 2,000 stocks, none of which are like Amazon.com, averaging a P/E over 100. This is beyond ludicrous, and thus government should step in to put a stop to the many financial websites getting people to buy into the Russell 2000 with the fraudulent posting of a P/E ratio in the 20s. Diligent investors short selling the lunacy should not be forced to keep losing on account of the various modes of manipulation.